Are you looking for a simple, low-risk way to grow your small trading account? Imagine earning $100 a day or even more without needing a ton of capital. In this video, I'm going to break down one of my favorite strategies to grow a small account, the Zero DTE Iron Condor on SPY. It's perfect for beginners and small accounts or anyone seeking to build consistent and safe income in the stock market. Stick around because this could be the game changer that you've been looking for. Hi, my name's Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family. Also, if you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. A quick disclaimer before we get started. The information provided in this video is for informational and educational purposes only. I'm not a financial advisor and I'm simply showing you my trades and how I trade. With that said, let's move forward and look at the actual strategy. So first, let's talk about why would you want to trade on SPY. SPY is actually one of my favorite ticker symbols to trade on because SPY has a lot of volume. SPY represents 500 of the largest and most established companies across the United States. It's one of the most liquid ETFs to trade on with tight bid and ask spreads, meaning it's easy to get in and easy to get out. Next, let's talk about the actual strategy that we're going to utilize to make $100 a day. So this strategy is known as the Iron Condor. Now, what's an Iron Condor? An Iron Condor is an options trading strategy that lets you make money when a stock or index stays within a certain price range by the time the options expire. All options have the same expiration date in this option strategy. Your Iron Condor will have 4 option legs in total. It's going to include 2 puts. We're going to buy 1 put, we're going to sell 1 put. And this is also known as the put credit spread. For the remaining legs of the Iron Condor, we're going to buy 1 call and we're going to sell 1 call. And this is also known as a call credit spread. So simply put, an Iron Condor is a combination of a put credit spread and a call credit spread combined. The ideal scenario for us to profit when we open an Iron Condor is for the price of the stock to land in between the middle of the options that we've sold. Let's look at an example now and see how an Iron Condor would work. Let's say SPY is trading at $500 today, and you think SPY will remain between $490 and $510 during the day. So you would open up an Iron Condor like this. You would buy a $485 put option, also known as a long put. You would then sell a $490 put option, also known as a short put. And on the call side, we would sell a 510 strike price call option, also known as a short call. And then we would buy a 515 call option that would serve as a long call for this Iron Condor. Now, let's look at this diagram over to the left-hand side. So this green zone right here that represents the middle of this diagram is our max profit zone. As long as the price of SPY remains in between this green zone right here, we get to pocket the entire premium that we collected by opening the Iron Condor. As soon as SPY starts entering the red zone on either the call side or the put side, you will begin to lose money. You will have a max loss on the call side if SPY's price exceeds the price of your bought call or the long call, which is 515 in this case, and on the put side, you will have a max loss if the price of SPY falls below your bought put, which is the long put at $485. Now, let's look at a quick summary of the Iron Condor. You collect a premium upfront when selling the Iron Condor. The risk and reward is defined and limited. With an Iron Condor, you don't need to guess the right direction. You just need to be comfortable with the range that you've selected for the Iron Condor. Again, it's a great strategy for small accounts as it does not require a lot of capital to put on an Iron Condor. When opening an Iron Condor, you also benefit from time decay, also known as theta decay, because you're actually selling the Iron Condor. So when you sell an Iron Condor, it starts to lose value, and that's exactly what we want as a seller of the Iron Condor. Next, let's look at some of my entry and exit rules for the Iron Condor. For the entry rules, I like to enter when the VIX is generally around 20 or lower, because the goal is to do this on a day that's not too volatile. Again, you want to choose a day that there are no major planned events like the CPI, Fed announcement, etc. You want to enter your trade after the first 30 minutes to an hour when you see clear market direction. As far as exiting the trade, you want to exit the trade when you're in profit about 50% to 75%, or if you're comfortable letting your iron condor expire worthless. Again, if you have strong conviction that the market direction will not change by expiration. The stop loss for this trade would be about 2x the premium that you've collected when opening the iron condor. So for example, if you collected $100 at the time of opening the iron condor, your stop loss would be when the trade turns negative $200. Next, let's look at some risk management tips. First of all, you want to use a spread width of about $5 on the SPY to keep your risk to a minimum. I suggest a $5 width because the more the width, the more the risk that you're taking on when opening the iron condor. Paper trade first to see how spreads work, because you can easily lose a lot of money if you don't know how to properly trade the iron condor. Only trade the amount of contracts that you can handle. For example, one $5 spread on SPY has a max loss risk of $500, which is $5 times 100 shares for every single options contract. So if you trade 5 contracts, your max loss would be $2,500, versus if you trade 10 contracts, in this case, your max loss will now turn into $5,000. So be mindful of your account size when opening the iron condor and only risk how much you're willing to lose. As always, do not use any more than 10% of your total account size in any single trade. And always have a hard stop loss in mind before you go in any trade, because these days the markets can change direction quickly on any unexpected news or tweet. Next, let's go over to Robinhood and do a live example on SPY. So I have SPY pulled up here on Robinhood. We're going to click on Trade, SPY Options. And I'm recording this on Wednesday, June 18th. Now keep in mind the stock market's closed June 19th. So we're going to go out one day to the next business day or the next trading day, which is June 20th. And I'm going to go ahead and start building the iron condor now. First, I'm going to build a call credit spread. And to build a call credit spread, so SPY is currently trading around $600. So I'm going to go up to, let's see what the 606 is. Okay, the 606 strike price is a 15 delta. I'm good with that. So I'm going to go ahead and click on sell call. And I'm going to go ahead and click this right here and load this up. So we're selling the 606 call option in this case. Next, I'm going to go up 5 strike prices to the 611 strike price and buy the 611 strike price options contract. So we're going to go to 611 right here. Make sure you have buy call selected and load this up. So right now, as you can see, you're collecting a total premium of 35 cents, which is 35 times 100 shares by opening up this credit spread. Now we're going to go over to the put side and build our put credit spread. So to do that, I'm going to click on sell put. Again, we're going to keep the same expiration date, which is June 20th right here. So for the put side, I'm going to go ahead with the 590 strike price, which is about $10 or $9 lower than the current strike price. So I'm going to go and sell the 590 strike price. And then I'm going to go down 5 strike prices and select the 585 put option. And we're going to buy that. And as you can see right now, you would collect a premium of about $90 by putting on this iron condor right here. Obviously, the market's open right now, so the premiums are fluctuating. Now, let's look at this risk profile down here. At expiration, as long as SPY remains in between this green zone, you get to pocket your entire premium. Again, with the $5 spread, your max loss is capped at $500. And if you look at this orange zone right here, or red zone, whatever you want to call it, Robinhood showing a max loss of 408. It's because it's giving you a premium of $91, $92, and it's subtracting that premium out from the max loss. If SPY's price drops below 585 of our long put, or if SPY's price exceeds $606, which is a long call. Again, my suggestion is to close the trade as long as it begins to approach this orange zone, either on the put side or on the call side, or you can cut the trade at 2x the premium that you've received for opening this trade. Again, so if you collected $100 opening this trade, you would cut this with a max loss of $200. One final tip with the iron condor is to open the iron condor with a slightly lower delta. And of course, you're going to collect less premium by doing so. But in the long run, you will have higher chances of closing the iron condors in a profit. So that's it for this video. If you enjoyed this video and learned anything useful, Please give it a thumbs up, subscribe to my channel, and leave your comments below with any thoughts or feedback. If you'd like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.